Looking at the risk radar right now, the red light holds on equities, but there still seems to be plenty of room here for pushback against the sell-off from the highs, and a couple events over the next 24 hours that would argue, I think, lend themselves more to dip buying. A few things, though, that distinctly don't look like dip buying opportunities if they happen. So, firstly, bonds green too, continuing to catch the bid. We saw the auctions are also now adding on to some of the desire for bonds. That looks very much in trend. Here's the thing with inflation tomorrow. We've also got the debate tonight. These are two items that are, I would assess, lower volatility events, even though they might look like on the surface they should be volatility-inducing events. Here's the thing. Inflation, we generally have a pretty good grasp on. What we don't have such a great grasp on right now is the labor market. That's what's under debate. The big question, of course, is how bad is the employment situation? Is it deteriorating enough such that the Fed needs to deliver a 50 basis point cut? That is still very much live as we head into inflation tomorrow and then the Fed meeting shortly behind. What's important to remember, though, is that even though we may not have to sell off big on inflation tomorrow, it's not obvious that light inflation prints are a reason to rally big either. The 10-year yield next to the NASDAQ gives us quite a bit of information. Very simple chart over the last 3 months. The high for the NASDAQ aligned roughly with the high in the 10-year yield, which was in the July CPI print. July 10th, CPI hits, the NASDAQ peaks. Since then, lower yields have been generally bad for stocks. That's been one of the major pillars of the framework that you have to understand right now, is that the market has pivoted from being worried about inflation to being concerned about growth. That means that lower inflation numbers can arguably be interpreted as deflationary and recessionary. Does that sound unfair? That high inflation numbers were bad and now low inflation numbers might be bad? Sorry. We did go through a sweet spot there. We had a massive market rally over the last year. We had a huge stock rally as inflation numbers were coming down. But now we're at the point, because the jobs numbers have also come down, that the market hasn't responded terribly great to cool inflation prints since July. So that part, get that one out of the way here. Still, we understand inflation enough to where jobs data should matter more. So if we panic tomorrow, inflation probably sets you up for a dip buying opportunity. What's even more obvious, though, is if we get any volatility around the debate, because at this point, there's been so much mudslinging. If it goes heavily economic tonight, then maybe there's something to talk about. But vol right now, basically right below 20, lower than we were going into the NFP report, and significantly lower, obviously, than where we were when the yen trade was blowing up. That makes sense to me. What might change the situation is if jobless claims come in particularly poor. What also might change the situation is if banks keep selling off. Today's bank situation was a little bit of a wake-up call, because so much of the sector performance this year has been geared towards the defensives. The banks have been in there, but they're not defensive. The banks are generally pro-cyclical and economic, and the strength in the banks has generally been tied towards some of the hopes of an early cycle or mid-cycle refresh. What's important to keep in mind, though, even though the 10s to the 2s have uninverted, the 10-year to the 3-month still deeply inverted, and a lot of banks on the lending side that also own a bunch of duration bonds don't like the inversion. So maybe a little bit of a heads up here today that banks don't belong in the same category as the defensives until the bond market's fully worked through whatever it's going through. So that's not a great development. If jobs are weak, that'll be bad, but inflation in the debate shouldn't be hugely volatility-inducing events. Probably don't have to lead to a big rally either, though, unless tech just continues to grind. Have a great night.